Welcome back to On Point. My name is Arabile Kumete. Thank you so much for joining us live, right here at the Johannesburg Stock Exchange. With that, though, let's take a look at how the markets are performing. Then it has been an interesting time of late. Markets just continue to rise, especially out in the United States. Some of those markets there climbing. The S&P 500 even sitting still below that 3,000 point mark as well. So quite key and significant on that front. Pretty much a whole host of green as well out in that Asian market, 3.33% to the good as well there. Looking at the Nikkei there, around 0.8% to the good too. And that comes after Japan's economy, or finance minister said that they would look at adding a little bit more stimulus, another 1.1 trillion US dollars, that is, to their stimulus efforts as well for that economy. So certainly helpful on that front. A bit of a mixed picture out in Europe this afternoon, though. The FTSE 100 up 1.33% there, with the DAX out in Germany 1 2/3% down, unfortunately. The CAC 40 in France 1.33% stronger this afternoon too there. Taking in on the local market, well, it's 1.33% to the good, so very much trading well above that 51,000 point mark. The banks, unfortunately, not seeing too much of a positive figure there. Trading update from Standard Bank, and we'll get into that detail in a moment or two as well. But the biggest gain is the industrials going up there just over 2%. Very interesting as well then to have heard that Tencent is looking to buy a stake out of the Warner Music Group. That's the third largest music company in the world. And that company is hoping to get an IPO done. That's on the 3rd of June. So on Wednesday this week, that IPO will be priced tomorrow. And Tencent, the internet tech giant there out of China, is looking to get involved, which certainly means that Naspers locally will certainly have some sort of a stake then in Warner Music Group as well then. So that certainly shifts the market in that direction. So you find the industrials going up just over 2% as well. Local currency pretty much stable for the last couple of days as well, around that 14.50 mark against the US dollar. It's 17.47, should I say, at present. It's 19.41 for a euro and 21.64 then for a pound. The Brent crude price, well, seems to just be going higher and higher. Where it sits by the end of the week will be quite interesting as well, though, considering that this week we may begin to see another OPEC meeting where OPEC and OPEC Plus, which includes allies like Russia, may indeed agree to extend the production cuts beyond June and head towards the end of the year. But Saudi Arabia still has to convince Russia that that is the way to go. So for now, as demand begins to pick up, as economies open up, $38.12 a barrel then for Brent crude. A good picture as well for platinum and gold, both metals going up as well in trade today. That's the overall market picture. Let's get into a bit of the specifics. Gary Boyson does join me live here at the Johannesburg Stock Exchange. Gary, it's a good afternoon to you. Thank you so much for the time. So positivity, where in the world does that come from?
It's a very interesting situation. You've seen a complete, I suppose, split between, I think, the sentiment on the ground and what's happening in financial markets. So we're seeing, turmoil across the US over the weekend. We're seeing, certainly like absolutely incredibly poor, economic numbers coming out of the economies around the world. I mean, you look at labor markets everywhere, shedding jobs. South Africa is unfortunately not going to be spared. We've seen projections from National Treasury of unemployment, breaching the 50% mark. I mean, we're in a very, very desperate situation, and yet markets are wholly ignoring this. So part of the reason that we're seeing Asia up this morning is everyone was expecting the US to almost step back from the phase one trade deal with China. Trump didn't freeze Chinese assets in the US. He essentially changed the special status of Hong Kong, but didn't go as far as potentially some people had expected. And because of that, we're seeing a lot of optimism coming out of Asia this morning. That's just feeding into our local market. You mentioned Naspers in the top of the show. And Naspers obviously very, very reliant on that Tencent exposure, and that being lifted with the Asian markets, which is lifting our overall index.
Does this become a sense of stability, though? Like, I mean, we all get that it's probably not a financial crisis, right? It's just a health crisis, which has, impacted economics and finances. But does this mean that we're sustainably going to get back to the bull run, for example, that the US had been seeing for quite some time?
No, it's a very good question. It's very difficult to answer. So, either we're entering a period of stability, or this is the eye of the storm. And unfortunately, you look at the economic data, it looks very bad, and it's very difficult to see how many of these economies are going to get out of the situation. An economy is not something that you just switch off and switch back on. It doesn't work like that. Once you had actual fixed asset destruction, once capital has essentially been destroyed, it doesn't just people don't just suddenly start up the businesses again. It's not possible. At the same time, the market is one of the best leading indicators of economic activity. So to look at financial markets actually paints a fairly optimistic picture of what could potentially happen in the underlying economy. You could potentially see jobs improving off those very, very low levels, let's say 1 to 2 years out, which is potentially how far the lead might be. At the same time, though, it's a very, very tricky situation. And
is this the reset button, the time to sort of just say, okay, everything's capitulated in certain areas, we can try to restart at the very least now?
Yeah, I think we've got to try and restart. I think that's a very optimistic view to take, and I think it's a view that South Africa needs to take. We need to look at this as potentially like a place where we can reset. Look at it as a place that we can grow from. That's absolutely the right attitude. It's the right way to tackle the crisis. The problem is that if you look at the markets and you look at it as a leading indicator, yes, there's hope that we're going to recover. The problem is that we've got this enormous stimulus coming through from central banks. And especially locally, not as much. I mean, we've discussed the fiscal programs, but internationally, you've got enormous fiscal programs as well, supporting economics. Now, what happens is it's a shot in the arm for financial markets.
What happens
you're seeing markets react quickly, economies react more slowly. But as you say, that could potentially fade, and you can't continue to stimulate indefinitely without addressing those underlying root problems. So when you talk about a hard reset, this is the time to address those underlying root problems, which I think is the way that we've got to take it.
Yeah, hopefully they get these sort of structural reforms that we've been talking about going. Really, everyone has spoken about them. So I suppose time now to try and get them done. Let's get into some equity news then. Standard Bank coming out with a trading update. Hasn't been the greatest time really for banks, but only because they've had to administer some of the issues that are going out right now. And I suppose some clients backing off in terms of being able to pay the things that they need to. But is Standard Bank still a fruitful investment?
Yeah, so you look at the banking stock specifically, it's interesting. So banking is obviously going to be very reliant on economic growth. You have to have economic activity to have a bank being successful. There has to be people borrowing money, doing deals, companies growing. You look at what's happened with the shutdown so far. Essentially all asset-backed finance has been stopped. People haven't been buying and selling cars, so there's no need to go and originate a car loan, for example. Now, the issue with I suppose Standard Bank as an investment case is we know one of the reasons for investing in banks is obviously the higher dividends. It's kind of a fixed income haven in a world where interest rates are lower. Unfortunately, just to kind of protect their balance sheets, essentially, the banks have, and on the advice of the Reserve Bank as well, the banks have cut back their dividends. So you can't expect dividends from the bank, which makes them slightly less attractive as an investment option. Then looking forward, are we going to see a return to economic growth? That really is the question around whether you want to buy a bank now. We know that they're very, very cheap, but unless you can see economic growth coming through in South Africa, you might not want to be buying a bank at this stage. That said, our banks are still very, very well capitalized, still very, very well run. The problem is going to be those credit loss ratios, which you alluded to earlier, is how many people can now afford to continuously service their debt, even at low interest rates. And that's the number that everyone's going to be looking at. And how long does it stay
low for? How long do interest rates stay low for, do you think?
And the problem is that it's, using the stimulus, which is essentially dropping interest rates, the analogy that it's a shot in the arm, that it's essentially drugs for the market, is a good one, because, it's like low interest rates essentially do become almost addictive for an economy. When you have lower interest rates, people are encouraged to take on more debt. It's then more difficult to raise interest rates because you suddenly have borrowers that are under more pressure when interest rates go back up. So it becomes very difficult to increase interest rates at a later stage. If you look at our central bank, they mirror very much what's happening in the global economy. And really, the Fed has been quite clear. It's lower interest rates for longer. So it's difficult to see in the short term to medium term, certainly, a world in which interest rates are rising again.
Sure. Okay. Well, maybe the right time for me to get that new car or not. We'll see. Who knows? Gary, appreciate the time. Thank you so much there. Gary Boyson there from Ransford joining us as we unpack that market movement. Look, it certainly is a difficult time when one considers the debt scenario, but the market just keeps on climbing. There are, however, a few issues when it comes to company news as well as some other economic factors. We'll unpack those at the other end of this. Do stay tuned.